All right, we got one back. Yeah, I think something had gone wrong with like I had lost internet connection for just a second, or maybe a problem was on my end and YouTube cut off. So I lost everybody that was watching. I couldn't see. It looked like there was nobody left in the room. No comments were coming in. So I guess sometimes that happens, but we'll come back into it. I usually like the point where we're fielding questions and we were just getting to there, and then all of a sudden I lost connection or something like that. So I did go back and I'll wait until Triple Z gets in here. So, all right, we'll give it a minute for some people to come back in. Yeah, thanks for coming back, everybody. Sorry about that interruption. It looked like I had just lost internet for like 1 second. I got throttled by Verizon or something like that. And then all of a sudden everybody dropped off and there was nobody left. There were no chats coming through, so I couldn't even tell if anybody was still paying attention. So I went back into my Discord and found out the problem was on my end. People were still sending messages. It was kind of funky, but I'll wait for a couple more people to get back in here. If Triple Z is back in the room, thank you for sending that second super chat. I really appreciate that tremendously. So some people are asking, how do you make good money without using options or without using leverage? Because their broker doesn't allow them to, or maybe I know a lot of people that actually work for a company that is involved in finance and therefore they can't take on any options positions. So how do you do that? How do you make additional money in the stock market without using options? So you're in a tight spot if you're in that situation, because you're essentially stuck in either buy and hold or trading, like flipping. That's tough to do. That's really hard. If you're in that slot, I'd recommend taking half of your portfolio and buying into the Dividend Aristocrats. Those are they're all tracked under the ETF Noble, NOBL. I don't think you should actually buy NOBL specifically. I think you should take their highest holdings. So that would be AT&T, Prudential. What else is in there? 3M, Caterpillar. Those are all some pretty high, Coca-Cola, another one. Those are all some pretty high dividend paying stocks. If you put half your portfolio in them, then even if you can't trade actively, you're still looking at about 7% guaranteed returns every year. Those Dividend Aristocrats they're special because they are companies that have increased their dividend every year for 25 years, and they don't actively, they don't really change, they don't decrease their dividend, they only increase it. And that gives them a special status with different brokerages and things like that. Different organizations will recognize those Dividend Aristocrats and buy into them. And that's why the Dividend Aristocrats are very stable. They're pretty much guaranteed dividend money. Put half of your portfolio into that, and then you don't have to worry about trying to time your options in and out. All right, the other ones. What do you do with the other half of your portfolio? I recommend buying into the volatile stocks and looking for the big wins. That's when you're talking about picking up things like Tesla. All right, you want to pick up AMD. You want to buy, I don't know, freaking Plug Power. It doesn't matter. As long as the stocks are volatile enough that you're getting exposure to those rapid rises and falls so you can buy in and out, that's the way I would go with it. And Lonnie says he can only buy 401ks offered by work, and that only allows a few Vanguard mutual funds. If you're that boxed in that you can't even pick from any number of resources, you have to buy specific mutual funds, just go straight for the S&P 500. Usually it's called like the C fund or something like that. Just dump it all into that one. That's essentially the equivalent of you buying into this SPY, but you have your employer matching, I hope, with the 401k. If employer is not even matching your 401k, don't worry about it. Just open up a non-retirement account and go with that. Otherwise, go for whatever most volatile and most aggressive in there. What do I think about silver and gold? So the way I use silver and gold is a measure of uncertainty in the market. Gold tends to do well during the recessions. We know that. We're in one now, but it's also odd because stocks are rising at the same time we've seen the precious metals rising, which is a pretty unusual circumstance. I think silver and gold are good when we start seeing more volatility. People are going to start flocking to them. Right now, volatility is surprisingly decreasing. Generally. Today was kind of a different day, but generally it's decreasing. So I think silver and gold have kind of done their thing for now. We should wait and see if we start getting more bad news economically before buying into them. I know SLV got nailed that one time and it's starting to climb its way back up. I don't know if we start hitting all-time highs again unless we get very, very close to that high volatility environment we had before. Lonnie, thanks so much for the super chat. Appreciate it. You guys make things happen with those super chats. I take all that money and I put them into buying new equipment like this lapel. This was like 40 bucks. So that's what I did with my last round of super chats. Douglas, this is the second time you've told us that you're having a difficult time in the bathroom today. I recommend getting medical attention. So, good for you. Some other people asked, how do we... I'm about to block that dude. I work somewhere where I can't have internet during the day. What do I do? I think is the question. You got boxed out by a couple other people's questions. If you don't have internet during the day, you want to do what I recommended prior, just like the other people that can't actively manage their positions. Have half your portfolio into the buy and hold strategy. Make sure you've got that exposure. With the other half, go ahead and use leaps. And if you really want to actively trade just for fun, do a couple of credit spreads if you feel like you're going to have time during the day, at least a handful of times throughout the week, to go and check on your positions and you can manage it. If you're not going to have that kind of time at all during the trading day, just go straight for the leaps and the buy and hold, and you're going to outperform just about everyone anyway. So where does wheeling fall into this? Nobody asked that question, but wheel, if you're an active type trade, you're an active person, and you're not really going to have a whole lot of time to trade in and out of positions, you can't check your phone constantly, don't use the wheel as a way of premium hunting. I know a lot of people get sucked into that. You see, all right, if I could just wheel every week at the money strikes, I'll end up doubling my money. I'll get $1,000 a week on a $10,000 investment. All right, maybe, but the reason that the premiums are so high on that type of investment is because the stock is volatile. So the chance of you actually being able to wheel at the money week after week is exceedingly low. What you should do instead is use wheels as an opportunity to choose a buying price for your buy and holds. So right now I want to get Prudential at 65 or less. If I'm a buy and hold investor, I'm going to be waiting for Prudential to go down to 65. Right now it's at about 69.70. I don't want to just sit there waiting for the stock to go down. Instead, I'm going to sell a cash secured put at the $65 strike consistently. If I don't get filled, I'm still going to be getting about a maybe 0.7% return every week that I can use to buy shares of Prudential. So I can work my way in using the premiums. And when Prudential does come down to 65, then I hope that I will get assigned on my short put and I'll buy at the strike I wanted to buy at anyway. So use wheels as a place where you're actually don't use them to hunt premium if you're an active person who can't trade constantly. Use them instead as a way to buy at the price that you want and sell what you want. Village Messenger says, learning about risky plays from WSB, started to look into the world of investing. Debit spreads certainly interest me. It'll be 5 to 10% of my portfolio. I think that's the right idea. Don't use debit spreads too heavily because they have a high risk of actually going poorly. You need the stock to move in your favor. So use about 5 to 10% on the debit spreads about a stock you feel passionately about. I think that's good. And somebody else asked me, what's the risk of the wheel? All right, there's two risks. All right, assuming that you're doing what I just said, you're choosing strikes based on where you want to buy and sell a stock, what is the risk? All right, the risk is if you sell a put at $65 on Prudential, and then all of a sudden, a black swan event, yeah, Triple Z said it, a black swan happens, we've got like, I don't know, Prudential cancels itself, or gets canceled or something. All right, stock goes down from 69 all the way to 43. You are stuck buying at $65 because you sold the put there. So if you were actively watching and waiting for the stock to go down to 65, you might notice, why is it dropping so rapidly? And then you'll realize something terrible just happened. Prudential is getting boycotted or, getting broken up by legislation or something. Then you might say, all right, I actually changed my mind. I don't want to buy at 65. If you've already sold a cash secured put at 65, you don't have the option to just say never mind. You'd have to buy your way back out, which will cost you money. Alternatively, if it goes way up and you say, all right, I want to sell at 70, you sell a covered call, some great news comes out about it. Prudential had a stellar quarter. They were opening up new products, something like that. Stock goes flying up into the air. If you're just holding shares waiting for your exit, then you're in great shape. If you sold a covered call and the stock goes like that, you're probably going to end up missing out because you don't have time to cancel your covered call. That's the risk. You might end up losing, you might end up missing out on what could have been additional gains. So comments are coming in fast now. I'm just going to try to answer them as they come through. That's why I want to switch to Twitch. Those that are tuning in now for the first time, check out my Twitch link in the description. Hey, thank you for the super chat there. Penny stocks, plans on. I'll come back to you on that super chat. My Twitch link is in the comments section or the description of the video, I think. My future streams are going to be on Twitch so that I can actually interact with you guys a little bit better. This is really hard to do because the comments just come in and out so fast. So check out that link, follow it, and then we'll be doing future ones on there so I can interact with you guys. So I Hate Video Games sent me a super chat. Thank you so much. He says, "You were right about penny stocks. GNC bag holder here. Any plans on videos for learning calls and puts?" So some of my first videos on the Theta Gang strategies were calls and puts in the playlist. I would be interested in finding out, now that I've kind of gone a little bit further with the way I make my videos, if those original videos on buying calls and buying puts, are those adequate now, now that I've gotten better at making videos? Are we still hitting the mark with those ones? I'd be interested in your guys' feedback on that one, because I haven't actually come back to the original call and put strategy videos. But check those out first. If you have questions about it, you guys know how to reach me all the time. I always look through my comments on YouTube videos, like all the time. I just get them all compiled into one list, and then I can just search them. So if there's interesting information about it. How did I get my hair like this? This is actually a faux hawk that I gelled up. Nosika asked, "The original buying calls and puts videos are outdated. It would be nice if you do an episode on that again." Okay, I could do that. I dig it. I was using different applications to make those videos on calls and puts, so I'll look to update those as I can. I gotta get the PMCC video out first. That one's important. And the 3K challenge, I'm about halfway through the script. The trade is still on, so we'll see where it goes. How do I balance out implied volatility and the risk of the underlying breaking one of your wings of the Iron Condor? So you can do that by just choosing the right deltas. If you're selling at the 30 delta and buying at the 16, you're almost always going to be in the best possible position long term. Those tend to do very well. Najib, thank you very, very, very much for that super chat. I really do appreciate that. You guys make things happen with this. It's kind of, makes it all worth it to see the community giving back like that. It's huge. Thank you guys so much for it. Somebody asked me, what are my thoughts on Intel? So I have a couple of leaps on Intel right now. Far out of the money, but they were very inexpensive. So I've got, I think it's December of 2022. I've got a couple of leaps expiring at the $60 strike. I'm really just banking on Intel just getting its shit together by then. I know they're losing market share. I think there's got to be a turnaround at some point. I'd love to see a new board kind of switch things up a little bit. They only cost about $250. It was a $300, something like that. They're relatively cheap to enter, so I'll have those positions for a long time. My delta on it right now is very low, but as it starts rising up again, I'll benefit from it. Somebody else asked me, so what's my job outside of this? So I'm a cartographer for the government. We use like aircraft for mapping things. It's kind of an interesting job sometimes. Like over the weekend, or was it Tuesday, the president of Mali got like mutinied basically, and the other West African countries started blocking their borders like around Mali, and I had to go and map where those border blockings were happening. So sometimes it's interesting and sometimes it's pretty darn boring. Hey, hello in Turkey, that's interesting. So Donald J. Trump says, NVIDIA 20 times leverage all life savings. Interesting, you should bring up NVIDIA. So I'm at cash secured puts on NVIDIA right now. I think that's a really good one, really good opportunity. If you have 45 grand that you're willing to wheel with, then use some of that money to start wheeling NVIDIA. It's very, very high premiums on NVIDIA, and I'm loving the momentum that the stock is showing. So I'm going to continue doing that, start making some more significant premium as the time goes on and reinvesting it into shares. I'm getting like, I don't know, what did I get? Last month I got over $2,000 from NVIDIA, which is like an 8% return based on the amount of money I put into it. It's huge. Captain says, I was planning on technical analysis series a few months ago. When do I expect that to roll out? I expected to be starting that around this time. I'm not going to get there as quickly as I thought because I have a job that I wanted to not have, but I have it now. I love my job. Please don't fire me if you guys are watching this. I wanted additional time. I expected to have additional time away from work, so I wanted to get onto that series early. My job is more time consuming than I anticipated it being, which is why I haven't been able to get as far with my videos as I want to. I have a handful of more strategies I want to cover. I want to do the Poor Man's Covered Call, the Jade Lizard, the Twisted Sister, Leaps, obviously, and I think that might be it, and then I'm going to start getting into the technical analysis series. So it is coming, I promise. I'm not as fast as I wanted to get there. People are asking a lot of questions about Tesla. So I own 20 shares of Tesla, and I plan on having, once the split happens, then that's going to split into 100 shares, and I'll own 100 shares of Tesla. And what can you do with 100 shares? You can wheel. So my plan was that I was going to buy 20 shares now pre-split, wait until the split, and then I'd have 100 shares that I can wheel with. The thing is, Tesla just keeps going up. It is not showing any stoppage. When I started these streams, it was like 1,970 or something like that. I wouldn't be surprised if it's broken 2K right now. Somebody tell me if it has. But holding shares of Tesla right now is the best way to play Tesla, in my opinion. Because, you know, this is a stock that could easily drop $95 in a day and then the next day be up 100. So if you have a spread, you can get burned. All right, so it's 1993. That's huge. Some of you guys weren't even born by 1993. I'm expecting to hit 2000 pre-split. Once that split happens, I'd expect another 5-10% to keep going. After we start seeing some of that, if you start seeing that level out, like the stock isn't rising so quickly after the split, then I'm going to be looking to get into covered calls, and I'll continue my plan on wheeling. And so IKillsYou is in here, and he's saying, talking about the Patreon. There's still a couple Centurion slots left. You guys can get in there. It's all my live plays. And of course, you can always join as a henchman. There's unlimited slots for that one. You'll get my Patreon posts. And all that money does help me tremendously in terms of making this a full-time job. In order to do it, I've done my math. I figure I need another $1,500 a month that I can rely on, and then I can quit my day job and just go full-time YouTube. I think I can get there. I don't know if it's going to happen maybe not this year, but if the Patreon money keeps coming in and Twitch ends up being successful, I can see it happening by the end of the winter. That would be my ultimate goal right now, would be to go full-time YouTube. Not quite there yet, though. Hey, anything YT, thank you for that. For that super chat. Is 2,000 enough for Theta Gang strategies? Yes, 2,000 is plenty for Theta Gang strategies. You could lay on credit spreads with theoretically $50 minimum, and a lot of people do. They'll take $50, lay on a credit spread with a max loss of like $10, max gain of 40. They're not the highest probability strategies in the world. You probably have a less than 50% chance of succeeding. But, if you do succeed with one of those trades, you might make 4 times the amount of money that you had to put up. So if your max loss is $10, your max gain is 40, you only need to succeed 1 out of 4 times to end up being profitable on that. So $50 is the theoretical minimum if you're going to use spreads with strikes that are 50 cents apart from each other. That's fine. If you have $2,000, you've got plenty. It's not really enough to get a good solid wheel, but it is absolutely enough to do a poor man's covered call. I would recommend Snap for one of those. GameStop is another good choice. What else? ET, Energy Transfer. I'm pondering doing one of those right now. Those are all good choices if you have less than $2,000, but you want to use Theta Gang strategies. Riley says, do I think Tesla will join the S&P 500? It's eligible for it. We know that already. It's had enough quarters for it to be eligible. Let me clarify. In order to be eligible for the S&P 500, you need to have 4 quarters of profitability in a row. And you also, what was the other one? You need to have a certain stock price and a certain level of volume. If you have all of those, you're in perfect shape in order to get onto the S&P 500. I don't know which one is most likely to go off. I think Tesla will eventually take one of those slots. I can't promise you when it will happen. I do promise you that it is eligible for it. And as long as Tesla doesn't start getting crushed again, with another third wave of coronavirus in China, then it will eventually get on there. And I think a lot of that is already priced in, though. I think people are expecting it to happen. And once it's on the S&P 500, then you've got a lot of big funds that are suddenly eligible to buy into it. So now you've got, Vanguard or something like that can now get into it. All right, how do I go about choosing strikes for a stock when you're selling an iron condor? Do you use standard deviation? All right, so choosing strikes, the easiest way to do it is look at the deltas. And if you're not going to use technical analysis and you're going to look for support and resistance lines, if you just want to use the simplest way to do it, look at the deltas. You want to sell the call and put at the 30 delta, and you want to buy at the 16 delta. When you're up 50%, close the trade. Do those things, and I can all but guarantee you will do very well with iron condors. Those are literally free money if you're doing them correctly. It's not quite true, but you get the idea. That's absolutely what I'd recommend for that. How do you know which stock to pick over another? What I look for is I look for increasing revenue in a stock, and I look for a dividend. If it has both of those things, you can't go wrong with the stock. Just look for the increasing revenue, a dividend, and then just pick a stock that you like and is within your price range. I mean, if you have a company that's making more revenue year over year, and it either has never had a dividend or it has a dividend and it's increasing, all right? Either of those circumstances are okay. Just avoid the ones that are slashing their dividend. Look for revenue, that's the primary one. If it's got increasing revenue, it's a good stock. That's pretty much all there is to it. And then as long as it's not slashing your dividend, you're in good shape. All right. Anything in the top 50 in NASDAQ or S&P 500. I'm not quite sure what you're asking, Triple Z. Are you saying like which stocks in that do I think are the best ones to pick? Hey, thanks for the super chat, Cooper. Appreciate it. Every dollar counts. What I would pick, you know, for the top 50 stocks, definitely get yourself some exposure to Triple Q. That one's an obvious choice. Apple would be the next obvious choice. If you're looking for the volatility, pick Tesla, because that one's a fun one right now. And if you need the stability, use O. That's Realty Income. That one will, it's paying about 4.5% dividend right now. I can all but guarantee you that dividend will never go down in our lifetimes. It will only increase. So use O if you're looking for that slow, consistent one. If you're looking for the volatility, go for Tesla right now. AMD would be a good second choice. And if you really want to just pick a winner, use SMH, like shaking my head acronym. SMH is the semiconductor ETF. It's going to make money as we switch over to 5G. So the 5G plays, pick FIVG as a ticker, which is the 5G ETF, or SMH, which is the ETF for semiconductors, which are going to benefit tremendously from this whole thing. Okay, what theta gang strategies do you recommend for a small account? So I'm always going to recommend, depending on what you mean by small, if you can afford to wheel something that you like, do that. If you cannot afford that, use the poor man's covered call. And I know I've owed you guys a video on that for several times now. I keep saying it. I think there's got to be tons of videos on the poor man's covered call already on the internet. They're not going to be as fun as the one I'm going to make, but you'll at least get the point where you can get started on it. I am doing the poor man's covered call in my 3K challenge account, so I'll give you some information on that, although it won't be the focus of the video. Once I get the video done on the Greeks and the leaps, then the poor man's covered call is next, because I'm dying to get that video out. In the meantime, if you're really ready to get started, go ahead, look up poor man's covered call and some other people, and you'll get enough information to get started with that one. That's by far the best strategy for the small account. Do I have videos on credit spreads? Yes, I do. I've got most of the basic ones already. There's a couple more I want to do. Merlin asks, so what's the big deal about 5G? All right, so for those that aren't familiar, 5G is the next generation of wireless communications. 4G right now is, presumed to be, 7-8 times slower than what we're going to get with 5G. So the thing about 4G is that it's built with very large towers that broadcast over very wide areas. Thanks again, Cooper, for that second super chat. Geez, you sent a comment right after and I couldn't read it because it was too fast. Ask it again and I'll come back to it. So 4G, what we have right now in most of the United States, very large towers that cover a very, very wide area. Okay, 5G is going to be much smaller infrastructure. We're talking like, I don't know, foosball table size pieces of equipment in larger areas. And not in larger areas. All right, Cooper, currently cash secured puts using around 10K to make 100. I was wondering if this will work on a large scale. Yes, Cooper, so I'll come back to the 5G one. Cooper super chatted me a couple times, so I'm going to answer his question first. So he's talking about, all right, with a small account, you can use the wheel strategy, you can use credit strategies relatively quickly and make a fair amount of money. Is it sustainable? Can you scale that type of strategy? I argue yes, you can do that. My portfolio is a little over 400,000 and I'm mostly using the wheel. So you can scale with it. The problem you run into is that once you start getting into that like $500,000 account size, you're more interested in avoiding big loss than you are in making big gains. My dog's back out here. Jeez, gonna bug me again. When you've got a $500,000 account, all you need to do is not lose money. Keep it in an ETF and you will be a millionaire within 10 years. You'll be a multi-millionaire within 20. By the time you're ready to retire, you're gonna have like $8 million. All right, so you're not so interested in trying to get that big money so quickly when you have a large account already. What you wanna do is avoid the big losses. And with the wheel, you can suffer big losses. Think about what happened with some of the big stocks that haven't recovered, like Norwegian Cruise Line. It was up at, I think, like $70 before the crash. It's at $15 now. Even despite the market running back up, some stocks like Boeing and the travel stocks, the cruises, they have not recovered from that. So if you had $250,000 in the cruise line industry, you are now down to, I don't know, what would that leave you with? $100 and something thousand. You don't want to suffer those big losses like that. So wheeling is more risk. What I recommend doing is once you start having that big amount of money, you want to put about half of it into ETFs. Use the rest for the wheel. And David says, did you make money from trading, yes or no? Yes. Since 2019 and 2020 so far, I'm up about $100,000 of gain. So that's the unrealized, and I've got another about 30,000 of realized gains. So yeah, I mean, I am making money from it. It's not exactly hard in this market to make money, but and I use Merrill Lynch for most of my accounts, and then I've got Webull, which I use for some research, and then Robinhood for the other ones. What deltas do I set my cash secured puts at? I don't really use deltas when I'm doing the wheel. I just choose based on where I want to buy and sell a stock. So usually more technical analysis, not so much about those other things. I'll come back to these questions. What I really want to continue talking about is 5G, though, because 5G I think is an opportunity that we're not going to want to miss out on. With 5G stocks, all right, we need to upgrade a significant amount of infrastructure and a significant amount of equipment in order to take advantage of the increased speeds that we're going to get, the lower latency. We need to upgrade our equipment in order to do that, our hardware. So this phone that I'm using right now, this Apple phone, is iPhone, it is not going to be able to work on a 5G network. No iPhone that exists today is going to be able to work on a 5G network, which means if you want to take advantage of the additional speeds, the lower latency, all the other benefits of using 5G, you're going to need to upgrade your phone. That means that there's about 2 billion iPhone users out there that are going to want to get on that 5G network as soon as possible because they want the best. So that means every phone will need to be replaced. And what goes into iPhones? You've got Qualcomm chips. You've got, I don't know, what other chips we got in here? I had a whole list of them planned out. Obviously, you've got Apple itself. You've got Qualcomm chips. You've got Skyworks. Those ones go into all these things. Snapdragon, apparently, somebody said. Broadcom is another good stock for getting into 5G, absolutely. I did write up a Patreon post on this one. Any supporter at any level can do it. So for $2 a month, you get access to all of them. I have a whole list of my plays for it. Skyworks is one. Broadcom is one. Qualcomm's on there. But SMH is the important one. Thank you again, Cooper, for your $3 super chat. You got me on the wheel strategy. How about selling puts on SPY with a very large account? I don't sell puts on SPY anymore because SPY goes up too much that I end up missing out. So what I chose instead is just to buy SPY leaps. Those actually go up significantly more than trying to wheel SPY in this bullish market. Don't wheel SPY, don't wheel triple Q, just buy it right now. If you can't afford to, buy leaps instead, and you'll do very well. Back on the 5G one, so SMH is my pick. That's the ones that, it's an ETF that owns all these companies that are making the chips that we're gonna need to support 5G. So they'll hold Skyworks, they'll hold Broadcom, they'll hold Taiwan Semiconductor, they will hold AMD, NVIDIA, all of those ones. They're manufacturing the hardware and sometimes the software in certain cases that we need in order to transition to 5G. So if you don't want to pick a winner, you're like, I'm not really that good at stock picking, I'm not quite ready to do it, just go ahead, buy the ETF ticker SMH, and you will benefit from 5G. Nokia and Ericsson are also interesting ones because even though Huawei is probably the best suited company for actually setting up 5G infrastructure quickly, problem with Huawei is that it's getting boxed out of Europe. It's already boxed out of the United States. I don't think anybody in Europe or the US is going to want Huawei, a Chinese company, putting up its 5G infrastructure. So instead, picking Nokia or Ericsson they're the European companies that used to be big. You know, we all know about Nokia. Ericsson is similar. Used to have a lot going on. Now it's a much smaller company that's all around, you know, data processing and things like that. They're the best candidates right now for setting up 5G infrastructure across Europe and probably the US too. I think it was Pompeo, don't quote me on that. Pompeo wanted to actually buy part of Ericsson and Nokia in order to set up in the United States. Those would be good opportunities. I'll answer any more questions about 5G you want to. Abe says, is using the wheel with 1.5K investment a good idea? I think 1.5K is a little bit low to use the wheel because it's going to cost you to use, you know, really cheap, bad companies in order to wheel with. I don't want you to wheel General Electric. It's probably not a good choice. If you really insist on wheeling with 1.5K, use Energy Transfer and GameStop would be my choices. I'm wheeling GameStop right now. I'm actually using Poor Man's Covered Call, but it's very similar. And I'm considering one with ET. It's about 6.5. It's an energy transfer company. Cooper says, will I continue the 3K challenge? Yes, I'm actually in the middle of a trade for season 1 right now. It has its ups and downs so far. I'm going to call this one a warm-up episode, unless things get exciting tomorrow. But I'm going to start making the new episodes over the weekend. I'm going to try really hard to get it out over the weekend. I don't know if I'm going to be able to, but I'm going to do my best. If anything, it'll be a week after that. ETF is good, bad, and ugly. Better to pick if you know which ones. I agree that there's some bad ETFs out there, but the ones that you can't go wrong with are Triple Q and SPY. Those ones are always, they're going to outperform like every single time because you always pick the winner in every one of them. Is BAC a good stock to wheel? So banks aren't the best wheels because the volatility is usually very low and they are very binary in terms of their moves. So if there's a good, some good information about interest rates coming out, then they're going to move 3% in one day and then they're going to stop moving again. So probably not my choice for a wheel. Better for the Condors, as long as you can avoid getting those Fed minute type drops and stuff like that. So I wouldn't wheel a bank stock. I've tried it before and the premiums are just so low it's not worth it. If you want to buy something low volatility, then use AT&T. You don't get a high premium, but if you do get assigned, you're getting a 7% dividend, which is awesome. So Matt McGill asks about time frames on Condors. I've already recommended the 0.3 delta to sell, 0.16 delta to purchase. What time frame do I talk about? So I'm not patient enough to do the recommended 30 days. People have done a significant amount of back testing and they find that 30 to 45 days is usually the way to go when you're using Condors. I'm not patient enough. I go 3 weeks out at a time, sometimes 2. The 1 week outs are a little bit too tight because you don't get quite enough premium to make it worth it. Your risk is too high versus your reward. So I do 3 weeks, but if you're the type of patient person, then go to 30 to 45 days is usually the right situation. Back testing usually indicates that's the way to go. You don't have to do just one at a time, by the way. You can stagger week after week. So you've always got one expiring every week, but it was a trade that you entered 45 days ago. And then, that one's expiring. Meanwhile, the week following, you already entered another. I'm not explaining this very well because my dog is distracting me. She wants to get pet. All this dog hair all over me. But you guys get the idea. You can stagger your covered calls, not your covered calls, your iron condors, that there's always one expiring, even though you're only entering them for 45-day exits. That's a good situation. Hey, Mikey, are you in a bullish market? Is it best to hold or wheel? So when you are in a strongly bullish market, there's really not a lot of compelling reason to wheel. Just buy and hold. I mean, the best wheels really are going to be the ones that you're able to say, all right, I am satisfied with how high the stock has gone. I'd like to sell it and take my profit. So let's go ahead and sell an at-the-money covered call. That's really the ideal way to use wheels. What people tend to do, me included, are just you're hunting premium. You want to hold on. Cooper says, do you think a 25% return is realistic? I'll come back to that, Cooper. You're hunting premium. People are looking at these wheels and they're saying, all right, I want to make 5% a week off of this, and if I just keep selling at the money covered calls every week, I'm going to make 5%. It's not sustainable in that situation. You might get lucky and get it a couple weeks in a row, but if a stock is paying a 5% premium every week, chances are it's highly, highly volatile. So I wouldn't bank on that one. Cooper's asking, in a year, is 15 to 25% realistic? I can say with certainty that yes, that is realistic if you're using the wheel strategy, because that's what I used for most of 2019, and I hit that about 25% mark. I think the stock market actually went up like 18% in 2019, so hitting 25% isn't that phenomenal, but in 2019 it was mostly, I was mostly buy and hold anyway. Now that I'm in 2020, I don't actually know what my percentage return is, but I can guarantee that I'm on pace for at least that 15% gain. I think it's even higher than that. I'll have to get back to you. But yes, it is absolutely realistic. But don't try to get that 15% by selling at the money covered calls. It's not going to work out. You're going to end up getting either missing out on more gains that you could have had by buying and just holding, or you're going to end up getting assigned at a worse strike price than you wanted because the stock price is going to drop too quickly for you to keep up pace with it. How do you close iron condors? So depending on what brokerage you're on, you can close iron condors in one trade sometimes. Like Robinhood will allow you to just select your iron condor, hit close, and then it'll close at whatever price you want it to, if you can get a fill. Alternatively, you would just buy back the legs that you sold and then sell the legs that you bought. It's that easy. It's really no different than entering each individually. Yeah, this chair, somebody's commented on this chair. So this one actually has like these air pistons in it, so it's like a rocking chair made for camping. It's actually pretty cool. How do I think wheeling in the bull market can make less since you're not gaining as much, but when the stock drops, you lose more? So that's not quite what I meant to say. I didn't say that the wheel is actually going to make you lose money. if it's a bullish market. You're just not going to gain as much as you could have by buying and holding in the money puts and sell out of the money calls. That way you're consistently rooting for the stock to continue rising. I hope that makes sense. Like, you can get a higher premium by selling in the money, and you can benefit from additional upside. Jacob says, are there any books that I'd recommend? There's really not a lot of reason to spend money on books these days. Cooper, thank you very much for the super chats again. Have a good day if you're bouncing out, man. I don't really recommend any books right now because you actually have to buy the book unless you're going to the library. There's a couple of options called The Options Playbook is the only one I've read, and I really did like that one. It doesn't talk about the Greeks a lot specifically, but they're in there. If you want to learn about the Greeks, Investopedia is the way to go. It'll tell you what you need to know. And if you can sit tight, I am making videos on the Greeks. I've already got my scripts written out. I just got to find the time to actually make the videos, which is really hard because my job has been a lot more demanding since everybody started going back to work. Rain asks, is it dangerous to wheel an ETF? No, that's probably the safest thing you can wheel. The only risk of doing it is that you might underperform if it's a strongly bullish market like we're seeing now. Wheeling Triple Q has made me less money than buying and holding Triple Q since 2020 began. I'll say that. What I buy a call? Do I like DraftKings? I really haven't looked at DraftKings. It's too much of a meme stock for me, so I can't comment on it. Thoughts on only trading stocks? If you're going to just trade stocks, keep half your portfolio in ETFs and use the other half for meme stocks. That's my recommendation. Don't just day trade because you're going to underperform, but if you're holding half of it in Triple Q, you'll be fine. And then somebody else asked me about my day job again. So, Alistair, I'll come back to that question in a minute. So somebody's asking me, what's the last map I made? So that would be this week. I had to make a map when the president of Mali got deposed, like his own generals arrested him. And they didn't plan on killing him. He's still alive, but they forced him to resign and give up the government. As a result, all the borders to Mali, the countries around them, closed their borders at different points, and I had to map out where that was going to be. So is it time to come in? All right. All right. I got to get going, guys, because my wife needs some help before I bounce. But thank you guys all for the super chats. I really do appreciate it. We'll do this again. Next time is on Twitch. Those of you guys that just popping in now, I have the link to my Twitch channel in the description. We're going to start doing these on Twitch so that I can actually see what the comments are and they're not disappearing every 3 seconds, so that I can do a better job interacting with you guys. So check out the description section for my Twitch link and find me there, and we'll do the next one on Twitch. Thank you guys so much for everything. Appreciate it.